This video is about how to raise your credit score, particularly if you are thinking of applying for a mortgage for a home. Sometimes people ask, am I better off to have more credit cards or fewer credit cards? And in general, the answer is it's better to have fewer credit cards than a whole bunch of them, because the concern is if you do have a lot of them, if for some reason you decided to spend on every one and max them all out, you might have a hard time meeting that credit obligation and also your mortgage. So fewer is probably better. So I just mentioned maxing them out. Is that a good idea to show that even if you take them all the way up to the top, as long as you pay them off, the bank likes that? Not a bad consideration, but in reality, they would rather see you not use the maximum credit you have available to you. They'd rather see you use only some of it, because then in theory, you're more likely to be able to pay that off and then also, again, still pay your mortgage. So how important is it to pay your credit cards off monthly versus carrying a balance? This one's a pretty big one. You're going to do your credit score a big favor if you do not roll over a balance month to month. If you pay it off fully at the end of each month, that shows that you know how to manage your money and your financial obligations, and that you're not adding the interest as well as the amount that you owe, which a loan officer is concerned will compete with what you have to pay for your mortgage. People often wonder if they should close credit cards before they apply for a mortgage, maybe ones they don't use that much, or even open more. The problem with closing them is that you decrease what is called your credit utilization. You are reducing the amount of credit history by closing that card. The bank then won't look at it. And it's really important to show a history of using some credit available to you, but then also paying it off. So as far as opening new cards, while over the long term, that can increase your credit utilization and demonstrate that historically you pay them off, in the short term, it doesn't help you. First, because in order to open it, they will do a hard credit pull, which can reduce your credit score a few points. But additionally, doing that reduces the average age of your total credit card history, because this one's a new one. And again, that history showing that for 15 years or however long it is, you have paid off every month is an advantage. If you open a new credit card, that when it gets averaged in with the other credit cards you have, reduces the length of history you're showing, and that's less appealing. So better to really not close anything or open anything, just sort of keep everything the same. When it comes to your credit history and your credit report, there are always nuances, and it's best to discuss with your lender if for your particular situation what things you should or shouldn't do to improve your credit score.